down the road, are you guys gonna be overboard
You guys making all of that?
We're ready. Okay, we're back on finish a few things on the livestock and crop budgeting part, just a short part on that, and then we're going to go into records, record keeping, sources of records, types of records. On the budgeting part, I've looked over all of those that are here at the Mitchell site, and the other thing I wanted to comment, for the most part, they're real good. I did mention, I guess, when doing the budgeting part, that there should be an interest charge if you're borrowing money, and all of you I know are borrowing money, because otherwise you wouldn't be here. But I also can see that many of you I know have only livestock notes. And if you only have a livestock note, I can see why you don't put any interest out on the crops. But if you have an operating note that is for all types of inputs on the farm, would be the fertilizer, seed, chemical, parts, whatever. If you have machinery, that machinery, and you have an operating note, then there's interest on that operating note, and that applies to then the livestock and the crops that you have. You get spread over everything. And so, but if some, particularly the young students, probably only have a note for cows, and therefore don't even necessarily have machinery, or don't have an operating note, then I could see where you wouldn't have interest assigned into your crops. And that's only a small charge anyway on those things there. So taking the information that we went over last week on livestock budgets, and taking that a step further then, we want to go to this over here, taking that a step further then, in looking at buying livestock, feeding out livestock, and so the first one I put on here is using the information out of our books and on the markets, is buying the feeder steer and taking it to 1,250 pounds. So buying that animal at 550 pounds, weight, costs somewhere around $110. It varies from $105 to $115 depending upon the animal. And this is last Wednesday's sale price is kind of what I'm looking at out of the Platt sale barn. So buying the animal cost was $605. Putting on 700 pounds in and looking at the annual report in 2007, it indicated that it cost $63.39. And that covers your direct costs, feed, some other costs of vet supplies, and your overhead expense, which does exist for everybody as part of that cost. So I'm looking at that particular report. It costs us $63.39 to put on 100 pounds, so take that times 7, giving us the $443.73. Adding those two up, total cost then of getting that animal to market, a little over $1,000, about $1,050. So if I divide the $1,050 by the 12.5 hundredweights that we're selling the animal at, it gives me a break even of $83.90, what I have to have. So I'm going to go look at the futures market if I want to try to lock in something. October's futures is $86 as of the end of close on Friday. And the sale price then is about $2 below that, so it gets us about $84 when the time comes. There was a time when it was even or above, but right now about $2 less. So the sale price is about $84. So I take my break even of $83.90 that I need to break even minus my selling price, which is in this case $84. Gives me 10 cents per hundredweight loss, which actually is not bad. And 10 cents loss per hundredweight times 12.5 hundredweight, so I'd lose $12.50 a head. And so you can look at that at very different times, whether you want to lock in some kind of price or you're going to take a chance on the market moving one way or the other and marking in something later or not at all. And that's corn at 346, which is real close to where we're at right now. We're a little bit below that, probably, but fairly close. If I use the figures out of our 2008 report, it's going to look a lot different because corn was a whole lot higher in 2008, and so our costs were a lot higher. And that's where a lot of people were losing a lot of money. per head. I go down then to buying a feeder steer at again at 550 pounds and taking it to 850, so normally I put on backgrounding, putting on 300 pounds. So my animal costs again $605. I put on 300 pounds. Backgrounding costs, according to our book, $63 a hundred. That's $189 then. And so the cost into that animal, and selling it at 800 pounds, 850 is $794. So I divide that by my 8.5 hundredweights, give me a break even of 93.41. August futures at 92 1/4. Again, my selling price then, taking $2 off at 90 1/4. So again, I take my sale price minus my break even in this case. Okay, so I did that backwards, right? Okay, if I got my sale price at 90 1/4 and my break even is, no, that's still right, minus 93.41, I would lose $3.16 per hundred. Take that times my 8.5 hundredweights, and I would lose about $27 a head then doing back rounding from 550 to 800. A lot of times that's been the plus side of things. At the moment it's not. And again, corn then at $3.47 that we used in here. So if you know those costs of production, you can kind of use that information then in determining your marketing part, or buying livestock or not buying. I also did one for butchers. Not a whole lot of butchers being purchased anymore out in the market and finish them out, although there is a small amount of that being done. Most of our hog producers have a direct line to somewhere, a source of pigs that they get and bring in, so there's not a whole lot that goes out there in the public market anymore, so it's also a little hard to find a price on them. But at the moment, things changed in the last few weeks for whatever reason. 45-pound pig, it took a jump this last week. Cost about $45 compared to a year ago. It cost about $25 to buy a 45-pound pig. So it costs similar, about $1 a pound. We'll put on 215 pounds to get that hog up to 260 pounds, about where they market most of them at now. And so looking at an annual report, it costs $20.30 to put on 100 pounds, so that's another $63. So the total cost then of marketing is $108. Take that, divide by 2.6 hundredweights, or our break even, then at $41.54. June lean hogs is $73.72. This is live weight, $41.54 break even. Lean hogs on futures, on your DTM, or whatever you have system. We take that times 0.735, we'll get it down to a live weight basis, real close to that. And so June lean comes out to 54.18 on a live weight basis. July lean is 75.37 with 55. So we take the June at 54.18 minus our break-even at 41.54 times 2.6 would give us a profit of $32.86 a head. And again, corn at $3.40. So it gives us fairly good way of using some of that information and know what it's costing. The hogs then actually economic look relatively decent. This won't show up real well on here, but took this off of the DTM network yesterday after closing. Market closed. So for those that have a DTM system or access to one, they have a real nice page print out on there on livestock margins, break-even prices. And so that can also look at better in buying, see where they're at buying livestock. Here again, they took this 550-pound animal, just as we did, to $12.50. They're using the corn price right now, or yesterday at $3.39, pretty close to where we were at in our annual report, or we use in 07. Hay, they have $115 a ton, which is higher than we use. If I got that good quality of hay, I should be selling it and buying something cheaper to feed to my animals. Supplement $269 a ton in yardage. A little different things, gains, pounds, interest, charge. Feed costs $47.71, very similar to ours. Total cost $65.18, real close to what we had down in ours. So they got $65.18 and we had $63.39 in the 2007, so very similar price-wise. They got their sale dates and so forth, and they show the maximum price you could feed. The maximum price you could pay for a 550-pound animal was $110 per 100, which is kind of right where the market is at right now, so that basically at that break-even point. And it breaks it out for an 85-pound steer going to 13 1/4, heifers, and steers going from 550 to 850, which we did a sample of as well. And we had hogs, buying them at 45 pounds. And to show what you could pay there, $61.86 per hog. And instead of $45, that'd be about a $15 profit per hog. So very similar as to what we have in our annual report, the information that we have, but it's also something good to look at in buying livestock. The three-ring binder. Near the back of the book we find session 5. And then I go to page 2, session 5. We're going to spend some time on records, so I'm glad we're not doing this after lunch. It's not the most exciting subject, but very important, critical in the farming operation, in the business, to do and maintain if you want to be profitable, if you want to stay in the business. Our first session we had an income tax person, and obviously to do income tax you need a form of records, basically accounting for tax purposes. The second session we had a estate planning person in here. Again, we need records, not only financial records, but we need assets and liability records in estate planning as to what approach you want to take. Third session, I guess we got something on crop insurance. You need to know your cost of production records to know what insurance level you want to be at. Last session, we had the marketing person in here. And again, in marketing, you have to know your cost of production in order to determine what price you need to sell or lock in your livestock at or crops, both for sale and for inputs. And so, something that obviously very important to have. Mention couple things first, I guess, before. In record systems, there are two things they talk about. One is accounting, and one is records. And there is a difference. Accounting is simply income and expenses, and that's all your tax preparer wants and needs. If you're not given the information to make management decisions from out in the operation, or tell you how your operation is going. And so we do need what we consider then as farm records or business records. That will show us our assets, show us our liabilities that's put on a balance sheet. It will show us our cost of production. It will show us if it's crops or livestock. So records is something that needs to show the numbers of animals we buy, what their weights are, what we sell them at. So if you do it, and that analysis work like Roger and I do in our full-time program, we have to have the detailed information, which accounting does not provide to us, a simple accounting. And so there's a big difference in those things, and we'll talk a little more about that as we go along. So first thing we kind of talk about there is what types of records are needed for the farm business. Number one is farm receipts and expenses. The obvious thing, whatever type of record program system you're using. The big thing with farm receipts and expenses is that we need to devise a system within our farm unit of collecting that information and filing it to where it can be found and used. And we'll talk a little bit more about that a little bit later as well. So the information needs to get to a filing system or into the house or to a certain spot or whatever. A lot of receipts sometimes disappear in pickup cabs, and they would make it into a house where you needed to do some recording. And so you need something to put them in there where else they're not floating around in there, or the dog chews on them or whatever that might be in your cab, or the cab that you picked up something out in the pasture. And so getting those things, get a little bit of organization. But we need to farm receipts and expenses so that we know when we do enterprise types of analysis, we can put these expenses to the right kind of livestock or to the right type of crop. Number 2, inventories of crops, livestock, and etc. You need the inventories, of course, for your balance sheet, whether it's at the bank, FSA office, and in our case we use it too in our analysis program. So we need the inventories. Beginning of the year, end of the year in particular, and or also sometimes during the year. Number 3, inventories of equipment, buildings, and depreciation that we need. 4, inventory of all liabilities. 5, crops raised, inputs and outputs of those crops. 6, livestock acquisition and disappearance. Acquisition, of course, by calving or buying. And disappearance, of course, through death, loss, and selling of our livestock. And in some cases, if things aren't tracked, it will be also stolen. That's what we hear about once in a while, as a form of disappearance. 7, records of feed fed to our livestock for our particular program. 8, non-farm assets and liabilities. Also tends to be a big part on the balance sheet sometimes as well, particularly if you build a house, buying vehicles. And number 9, the last household and personal records. Roger talked about that in one of the sessions. About 75% of our people will track their household and personal expenses so that they know where that money is going. Second part on that page 2 and goes to page 3 is what are some of the most common uses of farm records then? One of the common ones which you've had to do and use in here on doing your financial ratios is to construct a financial statement. And so both your records then using your inventories, your liabilities, all this stuff showing up on a balance sheet or FSA farm plan. 2, for use in tax preparation or planning. 3, to assist in obtaining credit. Better records you have, you got to provide the information on assets. Better your chances of getting the loan, also possibly a lower interest type of note. 4, to develop a cash flow or budget. Some of you guys probably do not need to do it at this point in time. Some banks require it, some do not. Depending on the size of operation as well, where you're at as far as the cash flow goes. 5, to develop a total farm plan then. 6, to determine total farm profitability. 7, to determine the profitability of various enterprises or profit centers, which we do through our farm management program. Identify those for each livestock, each crop you have, which have been your profit centers or your enterprises. 8, to measure financial progress. 9 then, to determine strengths and weakness of the farm business. Very important to see what changes you need to make or want to make. 10, to track personal family living. 11 is to create a historical reference to be able to trend significant data to project future trends. And that's where the students that continue like in our program have those trends, that becomes very important to them. 1 year is a snapshot, several years will show which enterprises are making you money, which are not, and where you're at financially. And it's really looked at more and more now for those that establish in farming or ranching when it comes to obtaining loans and renewing your credit from one year to the next. Page 3 in there, it says what is involved in setting up farm record-keeping system. The only thing I'll mention on this particular time is number 2 there. It says set aside a place in the home for doing your record keeping. Someplace that can give you a little bit of privacy is ideal. Some people have offices off in their machine shed, and we'll area closed off. Some of the farmers I meet with, that's where we meet. That's where their office is. And is out into one of their buildings. We'll turn on to page 4 in your book. It talks about 10 criteria for the ideal record system. And you kind of check these off as we go through this. Number 1, it says records are updated monthly or at least quarterly. Ideally, of course, is doing your records monthly. Things are fresher in your mind, and it keeps things up to date better that way. A lot of our students, I guess, we're happy if they do it kind of quarterly. And so we want records up to date before spring work starts, they get real heavy in calving, or before they go out into the field, do their planting. Because we know during planting time, records aren't going to happen unless you get a wet spell or something like that. So then again, after planting and you've kind of done your first crop of alfalfa, you have a little bit more free time, and that's when we want people then to get caught up and to get your records done for the first 6 months of the year. The other period of time we want to have their records done to do farm visits is before harvest, because again, that's the time of the year they're not going to touch their books, generally. And then so the last period of time would be after harvest, which that varies a lot from one farm to another. And so we'll get into after Thanksgiving and into December is when we're trying to get them, the rest of our records done. And it's important to have them done by the middle of December for most of our people. Some of it don't matter. So that they can do tax planning. It's a lot easier to do tax planning before the 31st of December than after the 31st of December, which some tend to do. And then change the date on the check. Number 2 is balance sheets. Income statements are prepared at least annually on a tax basis. I would guess anybody doing loans or even with FSA once a year, you're going to have to update and do your balance sheet updates. 3 balance sheets reflect cost and market value comparisons. A lot of balance sheets do not. I know some of them do, and in our particular program as well, we do have both, reflects both the cost basis, which kind of stays the same. Market value then is also on there. So particularly in market or the cost basis, like in land, could be set at a particular price, which we are conservative on. You can look at the market value then, which it could be a lot higher. On our cattle and our cows, we don't with feeder cattle, it's market price, but our cows, most banks will have a price somewhere between $500 and $700, and that's where they stay. That's a book price kind of on your cow. And the market price, of course, would change a whole lot depending upon what you're doing the balance sheet. 4, then, if reporting taxes on a cash basis, income statements are prepared on an accrual basis to measure true farm profitability. That's where the income tax Schedule F will only show income expenses for the year. It has no indication how well you did farming. If at one of my 46 farms, cash basis, Schedule F is going to look great. But I know he sold a lot of his assets, and we did the balance sheet part of the operation and did the ratios like you guys had to calculate out. Things do not look very great. And so that's the true picture of kind of where he is, where they are at. So income tax thing doesn't give you a true picture at all where you're at. 5, records permit analysis of income generated and cost of production for each enterprise in your operation. 6, cash flow budget is prepared annually, beginning of the year. 7, the record keeping system generates comparisons of actual cash flow to budget projections Some of the record programs that are being used, the one we use will provide both an actual with a projected one, see where you're at, will do a cash flow, some will not do that. Detailed records are kept for individual fields, for production inputs, yields, and applications, or by a production unit for livestock operations. 9 records are balanced to bank statement balances. We have a good majority of our students, we have them do their records with their bank statement. The bank statement is ideal in that the bank statement will show your beginning checkbook balance for that bank statement. It shows the total income for that month, total expenses for that month, and an ending balance. And so if they do the records off that bank statement, it's real quick and easy to check if they're accounted for everything and by looking at those balances. And if they're not, then we know what to be looking for in what area, and we can find it. And so checkbooks, if you have one checkbook and you balance it, works well, but we find that a lot of people don't either balance them or they've got several checkbooks. And if just several people involved in the operation, obviously there's more than one checkbook. But if they don't all go through one bank, then it's all in that one bank statement. And so a lot easier to account for things. Because accuracy is really important. And the last one, the records are made available periodically to all key owners, operators in the business, and to your primary lenders. I think we'll have to talk about one of the sessions, what else you need communications with your lender. You need to be honest with them and have those records available to see where you're at. Okay, we're on page 5 in the book. This will mention a little bit. Record book systems, advantages, disadvantages, different kinds of systems. You can deal with the manual type of record book. We use this one out of Nebraska for anybody that's doing manual records, and we have one student that's still doing it that way. It's similar to the Minnesota book. There's other types of books out there. The one thing nice with the manual book, you don't have to worry about computer breakdowns, hard drives crashing, viruses, and everything else that can happen on a computer in your program. And so the only thing here you need is a pencil sharpener. Disadvantage, of course, if you gets a fairly good sized operation is making a lot of entries, and you manually, of course, have to add everything up. Or if you put it into a computer, if you put it in correctly, that will all add up all your figures for you. This does a very good job of all records, enterprises, crops, the whole works that you would have in a farming operation. With record systems, we provide a 3-ring binder to our students, and within the 3-ring binder, we have it divided out by months, so they can do their records monthly into here. Some may use input sheets, some may not. We have crop sheets in there for their records. We have, since you're doing it on a computer, we have to have inventory of livestock, crops, feed, and so forth. And so we have a little book also that comes out of Nebraska where we keep inventory of our livestock on a monthly basis. We have beginning and ending inventory of all your crops, feeds, prepaids, hedging market, stocks, bonds, wherever you have all goes in here from beginning of the year and the end of the year inventory of all your assets. And a place also lists liabilities, accounts payable, accounts receivable, all things that go onto a balance sheet. And so the inventory part is here, and the records are then on the computer, whatever program the students are using. All that information goes into this 3-ring binder. At the end of the year, they get their analysis. It also can go into here. Their final printouts go into here. A lot of people also, if they don't come through hole punch, they'll through hole punch their bank statements and stick them into here. And so when they want to look at, this case, 2009, or they want to pull out 2008 or 2007, they just pull this off the shelf and all the information should be there that they need. Better organized than myself at home. That's what we do. It's not what I do, it's what I teach. So. The other thing is with the records in our house, we just have a manila envelope. Right when we come in the house, punch to our little bulletin board, and so we come in with receipts for things. They get put into here, and we have another little spot where we stick our bills to be paid and stuff where they go to so they don't get lost. So we're a small scale business. We don't have a big farm that's got all kinds of records, so we're a smaller scale. So, but it's a collection point, and getting it from wherever you are at, where you buy and sell things, and getting it into the house at some point. And this is our collection point. And then at the end of the month, we stick it into a folder that has 12 sections in here. Give you different types of records, but we do it on a monthly basis. So when January is done, we jump January out of here into this thing, and then start over the next month. And then we put our records also on a computer program that we're using for our farmers. We're using at home for our personal records, and they go way back, and it's really nice. Occasionally you want to look up something, and you can look at your printout real quick and find it, and we hang on the receipts for a few years, and after that they get shredded, and we still have the printout though, anything that took place for the records. So different types of records out there. There's different kinds of accounting systems out there, and we're going to look at ours just for a little bit. The Farm Biz one, but there are other kinds of programs out there. Quicken, a few of our students use Quicken, and that doesn't work too bad. Some use QuickBooks. Gives Roger and I a little heartburn, but we can work with them. QuickBooks, the accountants like them, because all they care about is income and expenses. But we need some detailed information, and QuickBooks just doesn't really provide it. The thing with, and both of those programs do not provide a loan balance like our program will, which we need. There are different types of some categories, and that things different, but with QuickBooks you need about 3-4 different kinds of printouts to get all the information. You have your farm income expenses, you have another one for household, you have another one for capital purchases and sales. So it's just some different things you got to group together, where even Quicken has everything in one report. But ours provides everything in one report. And there are some other FarmWorks types of programs out there, FarmWorks being one, and some others that cost a little bit more that will provide that information as well. Go to page 9 in there, first before we get to the Farm Biz one. Page 9 in the book talks about, first of all, I guess you're providing some time to do your records. But it talks about in here buying 2 4-drawer filing cabinets and hanging filing folders and files to take care of things you need, and label the files. And some of our farmers have done this, not necessarily maybe 2 of them, but they'll have at least one of them, a 4-drawer one. And have 2 cabinets. It says in cabinet number 1, drawer 1, current records, 12 months of folders to hold canceled checks, receipts, and purchases January through December. Drawer 2, ASCS, FSA, government program activity. Drawer 3, current reference material, livestock fields, livestock file, alphabetically, feed articles, and feed folder. Folder formats, titles for people's dairy cattle, articles, so forth, information. And drawer 4, current reference, crop items, corn, wheat control information, so forth, things dealing with crops. Cabinet number 2, drawer 1, machinery manuals, folder in alphabetical order. I'm sure Darren does this, but
There's a box.
and so a lot of people, this would be out in their shop area, and a little extra time in putting it in an order and putting it back obviously helps next time you need it, and finding that information. Drawer 2, household equipment folder in alphabetical order. Drawer 3, business entity files, copy of partnership papers. In drawer 4, rental agreements, analysis, budgets, cash flows, tax files for the last 5 years of tax records. Rental agreements, really important to have them filed in rental agreements. Some of these other agreements that are business nature, really important to have them in some fireproof place. A number of years ago, one of the farmers I worked with, their house burned down, and unfortunately, in this safety deposit box, not safety deposit box, but this fireproof thing that you buy in most any stores, whatever else, kept the papers, those types of legal papers, contracts and things, in pretty good shape. There were singed a little bit, some of the corners, a little bit black, but for the most part, they stayed the fire. And so, those legal types of documents, you do need some place where you can provide protection from fire. Step 2 that it goes into after you have the filing cabinet. Step 2 says business desk to work from. Keep the desk a clean and free work area. If you come into our office, you'll know Roger's desk is pretty much clean. Mine is not, so just different in how we handle things. But I do have the right side of the desk to work with my students, and my other junk is on the left side of the desk, type of thing. Very clear. I was on a new farm that I'm working with where they have a real nice office, big office, and her desk and his desk, and some things you don't touch and some things you do, and whatever the place probably for the kid to come and play too, in there and have their own space type of thing, and whatever on there. But next page it talks about the other steps. Step 3, it says separate business area to work in. Where a place where you can avoid interruptions is, of course, real nice. It's hard doing records and working whatever with your son or daughter sitting on your lap. Occasionally this probably does occur. 4, handle material at once. And I know I had a little bit of problem with that. It would really save time when you get literature you read, whether it's bills, receipts, whatever else. Bills and receipts I usually kind of only handle once, but it's other kinds of things I get that are, you read this kind of good information and you don't necessarily get filed away, or you end up looking at some of these things a second time and cleaning it and throwing it, whatever. But good to have it handle material all at once. Pay bills and file. If you see a good article, copy it, clip it, put it in the file, and throw the rest away. It says nearly 2/3 of the mail we get today can be tossed, or most cases erased on the internet. We get a lot of the email. Step 5, set up communication periods. It says with your family, with your lenders, with people that you work with. Step 6, schedule breaks. Clear your mind. Step 7, delegate work. If you're somebody involved in the operation, take advantage of what people like to do best or they're best at, and let them do those areas. Step 8, get enough rest. Plan a realistic to-do list, and then focus in on it, set priorities, things to get done. Step 9, continue to train yourself on the changes going on around you, like workshops, tours, classes, trade shows. Budget 3 to 5 days per year for that. And step 10, it says take time to plan. At the end of each day, spend 10 to 15 minutes reviewing what you did and plan for tomorrow. And it says at the end of each year, spend 1 to 2 days reviewing what happened and budget with goals for the next year. And at the bottom it says attitudes are the secret power of working 24 hours a day for good or bad in the operation. The next page after that, it shows records through all of this, but many times we're asked as to how long we should hang on to records. And so we have a page in there that got out of some other material that I made a copy of. Tells different types of records that we may well have around the place and how long those records should be hung on to and kept, or otherwise at some point in time to be discarded to the next space. We're going to go to page 14. We're going to look a little bit at time on the farm record program that we use with most of our students called Farm Biz. A few of our students, a couple of them use Quicken, we have a few using QuickBooks. One using a more elaborate system that's a corporation out of Nebraska, a record system that they have. We'll just look at a few things on this Farm Biz program, some highlights of it. And the first thing I have up there is the main menu. And we have, of course, obviously your input information. It's one point on it. We got report printing, and we're going to look at that a little bit. Let's begin with Save a Farm. The program allows us to keep several farms or sets of records on it, and you can easily move from one to the other. Within that system, I have one individual student. She likes the extra work. And she keeps 4 sets of records each year. At the end of the year, we got to combine all 4 sets to do our analysis work with. And she has the farm records, and then she has the personal records as a separate to transfer money from the farm to the personal checking account, which comes money from different sources into the personal checking account and keeps track of where that money is going. She has a private business on the side that she keeps track of. And then she's also, the last couple of years, kept track of all medical expenses through the farm, was a Farm Biz program or different programs you call where the tax guy talked about where you can run expenses through and then deduct them from your income tax when you're doing your income tax work by employing your spouse. So she keeps track of those separate. The only thing that's real important when you've got 4 sets of records, I have a lot of students with 2 sets of records, and that you got to be sure before you put your records in for the month that you read on top which one you're in. Because you put the wrong records in there, the only way you can get them back out is delete each one back out. You can't transfer something into one spot into another spot because you put them in the wrong area. So that once in a while does occur, not a whole lot, but occasionally. Main menu, where we select a farm, multiple years, you can go back, it'll be saved, the years records are saved when you go to 2009, they can go back into their 2008 or 2007 or 2006 records whenever they want. Again, it's still on the computer. Checkbook, reconciliation, transaction reports, some other options under there. And I guess the only other thing is whatever record system you're using under that, again, Save a Farm, whatever record system you're using, it's very important that you back up your records and do it as often as you're doing the records. Every year there will be somebody that fails to do that. The computer crashes. And if the computer crashes, it'll always be about in November, December, not January. And so then you have to put your whole year's records back in there again. And there's different ways, of course, of backing up your records, different systems. I had one student that bought the computer with 2 hard drives, and it's one that automatically backs up to the other hard drive, so they figure if one crashes, the other one still should have the information there. And then we can always go to our technicians too, and somehow they have a way of figuring out, getting some of the information out there once in a while, but not always. Depending on how it crashed and what it did, whether you can get it out of there or not, or extract it. Page, I guess, 16 in there talks about different kinds of reports. We do with dollars a monthly balance. That balance is with their checkbook or with their bank statement. That shows that beginning and ending checkbook balance, total income, total expense for the month. Also have it printed out, so in case they do have a computer crash and they got to put the records back in, it's a lot easier doing it back off of this balance sheet than digging out of somewhere else in your records. This program, unlike some of the others, some of the, I would guess, more of the farm record type of programs will do it, but the accounting pages like QuickBooks and Quicken will not do a cash flow that I'm aware of. I've never seen it with those people. or we can do an actual cash flow. It's really nice. The bankers really like it. Because on one page or a page and a half, they can see your income and expense activity for the whole year and loan balance for the whole year. Different kinds of financial reports you can print it out. We'll look at a few of those, not a whole lot. We got detailed reports, vendor reports, net worth reports. We'll do a little bit of analysis work, a little bit of tax type of reports. Looking at page 18, our particular program has codes established and expense areas, income areas already established. And so when you put in the fertilizer, you identify it by a code that it's fertilizer. Some programs you have to set up from scratch. Some people can handle that. Generally you need somebody else to set it up for you. This stuff is already in place, so it takes a little bit to learn some of the codes, but not very, doesn't take long to learn them. They're very easy to find on a sheet of paper that has all the codes. And so like for fertilizers, code 730. And from that you can also enterprise it to where the fertilizer should go to corn, soybean, sunflower, alfalfa, whatever it may be, you put the fertilizer on. And that'll help at the end of the year when you want to look at crops and see how much fertilizer you put on your corn or your soybeans or whatever. And so they can further break it down by enterprises. So this is just a few of the codes that are used, shows example, dealing with crops, your fertilizer, your seed, crop insurance, and so forth, and a few other areas as well. And there's a code for everything, pretty well. Within the system, you can also go to page 20. The system also allows you to change the description of the code. Whatever the code may say, we can go in and change that description to meet our specific situation. And so that when it prints things out on the cash flow or detail, it'll be identified as to what we want it to be identified as. We're going to match code personal income and non-taxable, so we've got our code set up for personal expenses, personal income, as well as the farm on there. And pretty well covers everything again that you might have. Page 21 gives us some examples of livestock codes. We have the crop codes, we have livestock codes, we have other types of, there are codes for any type of crop you might possibly have. We've seen strawberries, grapes, sweet corn, whatever, there's going to be a code for it. And there's a range of codes for our livestock, beef feeders, bees and buffalo, so it goes alphabetical order of our livestock. We'll jump to page 23. This is just a sample of the complete year detail report. This deals kind of with dairy, but we can go down. And so bottom part of the page we got breeding code expenses for breeding of 704. We enterprise it then to our beef, in this case to dairy cows, 6290 is for dairy cows. We got 705 vet, and some of that then goes to dairy cows. 6310 is other dairy, and 6510 at the bottom of the page is for a farrowing operation, which there are very few of yet, or still. But so again, we break down our expenses going to livestock, break it down by enterprise as to what group of livestock the cost is going to. And then it'll also obviously add up each category, our totals and expenses in that particular area as we get to the end of the year. This is showing a sample only through about mid-year, and so we'll do this for all of our different areas. The thing that I'm using more of in our particular program and something I've got more accustomed with and familiar with is on this page 24 in there, and that's the vendor report. Ours tracks loans by using a vendor code, so we can track every note as to its activity. as many vendor codes as we have loans. We set up our own. And we're also having our students, wherever they do their major business at, like a particular co-op, vendor that co-op. We've had students that save them time and save them money by pulling up a vendor report from their local co-op. They've received a second bill, like for fertilizer or chemical or some other product that they thought they paid for. They can pull up this vendor report, and sure enough, it showed where it was paid. And so then they could dig out and go back in and indicate as such, saving them not by not being careful and paying the bill a second time. Things aren't supposed to happen, but we do know they do happen. And so a vendor code is a quick way to find out. You can also do it for hired labor, rental things, whatever else. You put in a vendor, and you can isolate those things. So you can go in and print out a vendor report, and you can specify which vendor you want, or you can do a variety of vendors, and all in one report. So there's some quick ways of looking at kind of where you're selling or buying products. Page 26, there's a money borrowed vendor report, which tracks your notes, beginning balance, money borrowed, money paid back, interest paid, and an ending balance on your loans. And I put it last, which was the first page in this section. Page 12, it talks about the Farm Biz program, and it's been updated to where it works on the newest computers, the Vista version operating systems. And on there indicates where we purchase them through. They're about not quite $300 cost of this particular program. They have a more expensive program. They'll do more elaborate things. But most people want just the basic, and that's a good place to start. If they want to get something more elaborate, they can move up to something more elaborate. Let's just be on the record. So if you want to get into where it's going to track inventory stuff, you're going to need a program that's going to cost a lot more money. This person, if you're all interested, we do not sell the product. We obtain it and provide it to our students. I know other people that have purchased it. Sometimes I've given them a little bit of help in getting started with it. They also provide a free sample of the program. They'll go through about 6 months of activities to see how it works and can be looked at in that manner. So just very basic, very good farm record keeping system. Okay, then the next section of the book there is what Roger went through. So it takes us back to the end of the book, the course wrap-up. We're going to go to page 38, session 5. And it talks about 8 ways to guarantee that you and your farm prosper. And you'll see one of these is going to be the first or second one on every one of these few pages. And the first one that talks about is know your production costs. It is critical in any kind of keeping track of in your business if you want to grow the business. So number one, know production costs, and we talked a lot about that just lately. Number 2, don't settle for average. Try to be in that top third when it comes to marketing, keeping your costs of production down. 3, expand cautiously, especially now as we go into 2009, 2010. 4, watch Uncle Sam. First, of course, was the farm program coming out, and now what other things are going to come out that would affect you in the stimulus package. 5, make yourself a 3-year plan. That's part of what you did the first session. You're setting some goals down as part of that planning process. You need to plan out, as you want to grow your operation, what things you need to get into place to get to where you want to go. 6, keep tabs on world ag developments. Markets now, of course, in all parts of the country affect what's happened here. The economy, what is happening now, is affected by all parts of the country. 7, take full advantage of new technology ahead. And eighth is don't go it alone. A lot of different resource people out there that you can work with can help you get to where you want to go with your particular goals. The next page in there, or somewhere in there anyway, talks about characteristics of a profitable farm or ranch from a different source of information. And number one, it talks the same thing. They know their actual costs, the cost of production. Two, they know how to control costs by when you price your products, when you book your products. Three, they keep accurate financial and production records. Four, they approach enterprises as a profit center. Five, they maintain high production volumes. Six, they utilize economics of scale. That's a larger little size of operations. Seven, they recognize their weakness as financial experts and obtain them some help in that area. Eight, to keep your capital structure in the right balance for maximum profits. Go a little bit with those ratios that you calculated out. Nine, they don't tolerate assets that don't produce. 10, they develop debt management skills and communicate effectively with their lenders. 11, keep risk under control and stress to a minimum. And 12, they plan ahead. And I guess the last one I have, it talks about strategies, planning for profitability. Again, it goes a good record system that identifies your actual cost of production. And as you grow, and as the young students that are in this class are in their early 20s, as their operation grows in size, then this stuff becomes more important, more meaningful. It's important all the way along. Two, development of a realistic budget. And they talk about keeping, when you do projections, when you do an income projection, you should stay about 5% below what you think you're going to be at. And when you project the expense side of a budget, whether it's crop budget, livestock budget, whatever, be about 7% below or 7% above what you think it's going to cost. And this would be true of fixing your kitchen in your house. The cost of it is always going to be more than what you expect it to be. And if you then project out that way, there's a greater chance you will be okay with some adjustments that will have to occur. Three, then again, develop a realistic 1, 5-year, and a long-range plan for your operation. Four, strive to function in the top 1/3 of your peers. 5, develop a business plan covering the next 5 years. So you see that more than once. Work on developing a positive attitude. Set some time aside for your training and upgrading. And 8, plan for at least 14 days off with family, spouse, and friends. Now we'll take us to the last page in your book. The last thing we'll do in the last assignment will be to fill out that evaluation form on the last page of the book. For those that are here, for those that are doing it by correspondence, the DVDs, last assignment then will be to fill out this last page and mailing that back to us with that last DVD. This copy then will be sent eventually on to state office in Cleveland. And after that is completed and turned in, one of the last things that I will need to do then, we looked at earlier, second to the last page in your book is a score sheet. There's a score sheet of 6 things that you are basically graded on. And I will be filling that out once all the work is completed, all the sessions are attended. For those people online, of course, this form can be filled out, and not the form, the evaluation form will be sent back online. And once we get session 5 completed, all the paperwork completed for all 5 sessions, I will then fill out the score sheet and mail a letter to your local FSA office from that information you filled out from the first session, and I'll mail it to them that you have completed the course and put a score on there, which most cases usually is a 1, once in a while a 2, or if it's not completed, it don't get filled out and they don't get mailed. And so that's kind of the grading system, we don't go below that. So that is our local office, and then once we get a lot of people complete it, then I will put the material together, all the evaluation sheets, and sent all the names into the state office in Huron that you've completed as well. And so when you get the letter or get a certificate, we'll have your new, you also get, once we get our new annual report, which we sent off on Friday to start the processing of doing our 2008 annual report. Once we get that back at the end of the month here in March, we'll mail out the newest annual report to you, to all those that are completed, along with a certificate of completion. And check the certificate over that I've spelled your name or names correctly, because that's also the way I will have sent it into your local FSA office. And once in a while I can read most everybody's spelling, but once in a while it gets a little tough, depending on penmanship or whatever else. Many of you have a little mailing label, whatever else that you mailed your stuff in on, so then I have no problems with those whatsoever. But check them over when you get them out. So when you're complete, score sheet that I fill out, and the letter of completion will go to your local FSA office, and a few months down the road we'll send in evaluations and all those complete at that point in time to the Huron office. And then I do that about 3 times a year, because some people it takes a lot of time and a long time to get completed. We thank you for coming, and those that are online or do it by DVDs. Thank you for participating in this program this year. And anything else, Roger? Okay, so that's your wrap up. Take care of the FSA training for 2009. And we hope you have a good year. And crops are great, prices come back, and so we can make a profit, not just survive. Thank you, and we can cut it off there, Richard.